this cycle, assuming October was the top, this cycle lasted 1,062 days. Last cycle lasted 1,059 days, and the cycle before that lasted 1,067 days. So the cycle length of this one was basically the exact same length, or just in between the last two cycles. I think one of the main reasons that people are calling for a longer cycle, it has nothing to do with liquidity, it has nothing to do with M2. The reason they're calling for it is because I think frankly, I think they've spent a long time promising alt season to a lot of people. I would say October is the most likely outcome, but I would start being open-minded to a low as early as like the April to May timeframe. And part of that is because of that 2019 style comparison, assuming you don't go into some type of recession. I mean, if the unemployment rate continues to creep up, yeah, like it could take longer than April. I mean, I think you go into it assuming, look, last bear market was November to November. The bear market before that was December to December. So maybe this one is just October to October.
Bitcoin has paused its climb, and critics are rushing to declare it broken. Gold just smashed through new all-time highs. The S&P 500 keeps marching upward. Even precious metals are thriving amid inflation fears. But Bitcoin? It consolidates, shaking out weak hands while everything else in the market looks euphoric. This is not abnormal, and long-term holders understand exactly why this phase matters now. The popular narrative says Bitcoin should follow liquidity, track M2 money supply, and explode when rate cuts arrive. Analysts promised the alt season for 3 years straight. They claimed institutional adoption would push prices into six figures without stopping. Much of that underestimated Bitcoin's nature. Instead, Bitcoin topped in October 2025 at $126,000 and has been retracing ever since. This is testing conviction, flushing leverage, and resetting expectations after a cycle fueled by excess optimism. Benjamin Cowen says this is not random or meaningless. It is a cycle-driven market that topped quietly rather than euphorically, and it mirrors 2019 when Bitcoin corrected for months before resuming strength. He argues the 4-year cycle remains intact. The liquidity arguments are misunderstood. Bitcoin historically leads rather than follows the money supply. The cycle length from this peak matches the previous two almost perfectly at 1,062 days. This reinforces that Bitcoin's structure remains strong. What comes next will reward patience, and disciplined holders will be positioned when momentum returns. Let's watch clips from Benjamin Cowen's interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
I've sort of kind of related the current environment to the 2019 style environment where Bitcoin started showing weakness couple months before quantitative tightening ended. You could argue that Bitcoin is more closely tied to liquidity and rate cuts than other aspects of the market, like precious metals and stocks. With stocks, you have a lot of passive flows through 401ks. Precious metals, I feel like this is just normally when inflation is an issue and there's this expectation that the Fed's going to come to the rescue. Normally, gold, silver, precious metals in general do really, really well. People like to buy hard assets, especially during times of uncertainty. And so I think Bitcoin has sort of lost the attention right now. It feels very much like 2019 to me, where we just came out of a bull market, but the bull market was mostly led by Bitcoin, and there was not an alt season after Bitcoin topped out. And you did eventually get an alt season, but it took another year and a half for that to actually happen. So I think that, Bitcoin is struggling in a sense because there's this 4-year cycle historically associated with Bitcoin where it tends to top out in the fourth quarter of the post-halving year. Whereas that's not really as much of a thing with stocks as it is for crypto. And so I think you have the headwinds of the 4-year cycle, where people just kind of assume that it tops in the fourth quarter of the post-halving year. You also have quantitative tightening having ended in December, and Bitcoin found that top in October, noting that in 2019, Bitcoin topped in June, and quantitative tightening ended in August. So there's just a lot of similarities. And then the last thing I think is that crypto really thrives on attention. And I track something called the social interest, like social risk, I guess you could call it. Here's the social risk, and it's relatively low. And so if we color code the price of Bitcoin by social interest, right, this is the first cycle at the end of the post-halving year that we topped on apathy rather than euphoria, right? So when it's red, you have a lot of retail interest, like 2017 and 2021. But this one, we topped on apathy rather than euphoria. And it actually more closely resembles 2019, where we topped on apathy rather than euphoria. And back then, Bitcoin just slowly started to bleed. And then eventually we had the pandemic. It led to a lot of rate cuts. It led to a lot of money printing. And then Bitcoin went to new all-time highs. So I kind of think we're in like this phase of the cycle where we're just kind of slowly bleeding, waiting for looser monetary policy. And my guess is that we're not going to really get the looser monetary policy we're looking for until sometime after Jerome Powell is replaced as chair of the Federal Reserve. And that's not going to happen until May of 2026. So I see continued headwinds, macro headwinds for Bitcoin into the first half of 2026. So one of the things to note for Bitcoin is that in the last few years, anytime the unemployment rate started going higher, Bitcoin kind of stalled out. So if you look at, 2023, you can see that like as the unemployment rate was going up, that was when Bitcoin stalled out in 2023. And then in 2024, when the unemployment rate started to move higher, that was when Bitcoin stalled out. And you could argue the same thing's happening now, right? As the unemployment rate's gone higher, Bitcoin has once again kind of stalled out. So I think that is going to continue to be a macro headwind for the next few months. Like I think the unemployment rate will likely trend higher for a little while. Initial claims are relatively low, and whatnot, but hires are down, right? Like if you look at if you go to the macro side of things and you look at hires, they're really low right now. Like so there's not really a lot of places hiring. There's not a lot of job openings either. And so, when you're in an environment like this, there's this uncertainty. Like, I just don't see this stuff improving until later. Like, I don't think it's going to improve in the next 6 months, basically. I think it's going to take longer. I think we do need a lot more rate cuts. You could argue that one of the things that makes Bitcoin go parabolic is when I think it's when like the 2-year yield or when the Fed funds rate is below the 2-year yield. So if we overlay the 2-year yield onto the Fed funds rate, and let's just set this, to the same scale, what you'll notice is that, back in 2020 and 2021, when we had alt season, when we had this parabolic Bitcoin rally, it was when the 2-year yield was basically going down to, or where the Fed funds rate was going down to where the 2-year yield was. And like that's not always a thing, but it does seem to be a thing right now. Right now, I think Bitcoin is in this phase where it's just bleeding to the S&P 500. I think that's kind of what's going on right now. And note that last cycle, when Bitcoin went parabolic, it wasn't until after the S&P 500 had that sell-off, right? Because the Fed responds to stocks falling, but it does not respond to Bitcoin falling. So really, in order to ignite the next bull market for Bitcoin, which would also likely end up being a bull market for some altcoins as well, you probably need a reason to justify for the Fed to get a lot more dovish. And I don't think that's going to happen while Powell is the chair of the Federal Reserve. If you look at the ROI of Bitcoin as measured from the low, this cycle, assuming October was the top, this cycle lasted 1,062 days. Last cycle lasted 1,059 days, and the cycle before that lasted 1,067 days. So the cycle length of this one was basically the exact same length, or just in between the last 2 cycles. I think one of the main reasons that people are calling for a longer cycle, it has nothing to do with liquidity. It has nothing to do with M2. The reason they're calling for it is because I think frankly, I think they've spent a long time promising alt season to a lot of people. And so what other choice do they have, right? than to say, oh, well, the cycle has to go on into next year so that all the things that I've talked about for the last 3 years end up actually happening. Because if they are to sort of admit that we're in a bear market, it's basically like, well, why did you spend the last 3 years shilling altcoins when they were just bleeding to Bitcoin the entire time and the macro conditions didn't really facilitate an alt season?
Cowen explains that Bitcoin has lost attention at the worst possible time. He tracks something called social risk, which measures retail interest. Right now, it sits near historic lows. Every previous cycle peak occurred when retail investors flooded in, and social interest turned red hot. But this time, Bitcoin topped, while almost nobody cared. This creates the first cycle, top-driven by apathy rather than euphoria. That changes everything about how this bear market will play out. The comparison to 2019 is nearly perfect. Back then, Bitcoin topped in June. Quantitative tightening ended in August. The price slowly bled before eventually collapsing. This time, Bitcoin topped in October 2025. Quantitative tightening ended in December. The same slow bleed has already started. Cowen warns that this pattern will continue into 2026, with a likely counter-trend rally in early 2026 that will trick people into believing the bull market has resumed. Then comes a lower high, followed by a brutal drop to new lows. This is exactly what happened in 2019 when Bitcoin rallied hard after the initial bleed, convincing everyone the bottom was in. But it turned out to be a fake-out that led to even lower prices. The pattern is repeating itself, and most people will fall for the same trap again.
The reality is it's absolutely true. Like the analyst who came on your channel and said that the 4-year cycle is not based on the halving, I actually agree with that, right? Like I actually wholeheartedly agree with that. And one of the reasons is because if you look at the S&P 500, I'm going to share my screen again, throughout the 50s and the 60s and the 70s, what you'll notice is that there was a low approximately every 4 years, like 1958, 1962, 1966, 1970, 1974, 1978, 1982. So we can see the 4-year cycle has historically existed outside of Bitcoin, right? Like Bitcoin does not have a monopoly on the 4-year cycle by any stretch of the imagination. At some point, it broke, right? I mean, you can see there was not a major low in 1986. There was this low, and then we went below it in 1987. So it's not that it can't eventually break. The 4-year cycle for Bitcoin most likely will eventually break. But the point is like it has existed before outside of Bitcoin and halving cycles. So I do think it would be a mistake to assume that the current Bitcoin cycle is based solely around the halving. The reality is, historically, risk assets have found lows in midterm years, and then they just trend up for a little while. So I think that is absolutely right. And the analyst who said that on your channel, I completely agree with. Where I would disagree is the idea that like Bitcoin is following M2 or it's following some other thing. And the reason for that is like, those same arguments could have been said a year ago, right? Like all those same exact arguments those people made a year ago, and they used it to say like why Bitcoin would go to a certain price because they were looking at like a lagged version of M2. But then none of that actually played out, right? Like the cycle played out how it always does, where it tops in the fourth quarter of the post-halving year. And so what I feel like has happened is that people are now getting desperate and saying, oh, well, now we need to wait until next year. But historically, Bitcoin has always topped, 6 to 8 months or so before M2 tops. In fact, had you waited for M2 to top in 2022 to declare the bear market, what's interesting is the bear market was almost over by the time that M2 topped last cycle. M2 is not a leading indicator for Bitcoin. Like liquidity is not a leading indicator for Bitcoin. I would argue, and I know this is going to be met with a lot of criticism because when I first said it over a year ago, it was met with a lot of criticism. Bitcoin leads liquidity. Bitcoin has a way of sniffing out where liquidity is going to go well before it goes there. And so when you're in the middle of a bull market, it looks like Bitcoin is following liquidity because both are going up. But every cycle, Bitcoin tops before M2 or some, derivative of M2 ends up topping. And I think that's what's gotten people into a lot of trouble. And so what's interesting is this bear market, while it is, in my opinion, a bear market, it's actually kind of different than the last two bear markets in the sense that we've topped on apathy rather than euphoria, as I showed earlier with the social risk chart. So when you look at the current bear market and you say ROI from the peak and you compare it to the last few bear markets, this has been like the best bear market so far because we're only down, like 30 to 40% from the highs. In the other bear markets, by this point, we were closer to 50% down. And in some cases, we had already gone 70% down at this point. Like in 2018 and 2014, after this amount of time, we had already seen the price of Bitcoin go like 60 to 70% down. So this one looks a little bit different. And the reason I think is because you didn't have retail FOMOing in at the top and you have sort of a slower bleed. And so if you compare this bear market to the one in 2019, it looks like this. And let's just ignore the pandemic, right? Let's just ignore the pandemic. So the current bear market actually looks like this. So what I think could happen is I think in early 2026, I think there's going to be a counter trend rally by Bitcoin where it's going to make the people that are tracking the M2 correlation think they're right. Okay. But like 2019, I think it's going to lead to a lower high. Okay. It's going to lead to a lower high. And then after that lower high, I think it'll then fall into a lower low. I think it would have played out the same way. Like I still don't think there would have been a rotation into altcoins. I'm not saying there won't eventually be one, but I just think that, the people that have sort of waited for that alt season were kind of ignoring monetary policy. And if we just looked at monetary policy in the last cycle, it would have shown you that alt season was not a likely outcome the last few years. And like, I can't say exactly when that rotation is going to come, but I will say that, last time it took like 18 months for it to happen after all Bitcoin pairs went to the range lows, which occurred about a month after quantitative tightening ended. So, it might just be that this cycle was more of like a Bitcoin maxi cycle. I would say October is the most likely outcome. But I would start being open-minded to a low as early as like the April to May timeframe. And part of that is because of that 2019 style comparison, assuming you don't go into some type of recession. I mean, if the unemployment rate continues to creep up, yeah, like it could take longer than April. I mean, I think you go into it assuming, look, last bear market was November to November. The bear market before that was December to December. So maybe this one is just October to October. That makes the most amount of sense to me, but I'll start looking for a low as early as like the April to May timeframe. It could be that we form a low in April or May, and then maybe like we sweep the low in October or something like that. I could see playing out.
If you can give us an outlook for Ethereum and Solana in 2026, what is your outlook on those two alts?
I mean, I think the Sol Bitcoin valuation looks pretty bleak to me. Like, I think Solana's Bitcoin valuation is going to continue to drop. The Ethereum Bitcoin valuation looks a little bit better. I could see it forming like a higher low, maybe early 2026 or something like that. So I would say Ethereum's Bitcoin valuation looks better than Solana's Bitcoin valuation right now. I think it's more likely that Solana bleeds against Ethereum is kind of like a quick way to think about it.
The biggest problem is not Bitcoin's price action. It is that almost everyone misunderstands what drives Bitcoin in the first place. Cowen destroys the popular belief that Bitcoin follows liquidity or M2 money supply. He points out that Bitcoin has always topped 6 to 8 months before M2 peaks. This means Bitcoin leads liquidity rather than following it. In the last cycle, M2 did not top until 2022, but Bitcoin peaked in November 2021. Anyone who waited for M2 confirmation missed the entire bear market. This matters because so many analysts built their entire thesis on lagged M2 correlations. They promised Bitcoin would hit $200,000 or higher once liquidity expanded. But liquidity expanded, and Bitcoin still fell. Now those same analysts are scrambling to explain why their models failed. Cowen says they are wrong, and history proves it. Bitcoin does not wait for central banks to print money. It sniffs out where liquidity will go long before it arrives. The macro picture looks even worse. Cowen tracks the unemployment rate, which has been climbing steadily. Every time unemployment rises, Bitcoin stalls. Job openings have collapsed. Hires are down. There is no sign of improvement in the near future. The Fed will need to cut rates much deeper than anyone expects before Bitcoin can sustain a real rally. That will not happen while Jerome Powell remains Fed chair. Powell's term ends in May 2026. This means Bitcoin faces continued macro headwinds for at least the first half of 2026. The 4-year cycle has not broken despite what popular analysts claim. Cowen explains that the cycle existed long before Bitcoin in the S&P 500, which reached major lows approximately every 4 years from 1958 through 1982. Bitcoin did not invent this pattern. It simply follows the same rhythm that risk assets have always followed. Every data point confirms the cycle played out exactly as it always has. Cowen explains that rotation into altcoins requires loose monetary policy, which does not currently exist. In 2019, Bitcoin failed to rotate into alts. Alt season did not arrive until 18 months later, after massive rate cuts began. The same pattern is playing out now. Altcoins will continue bleeding against Bitcoin throughout 2026. Solana looks particularly weak and will likely lose value against both Bitcoin and Ethereum. Ethereum shows slightly more strength and might form a higher low early in 2026. But nothing looks promising until macro conditions shift dramatically. Bitcoin will bottom sometime between April and October 2026. Will you hold through the pain and buy the dip when Bitcoin hits $60,000? Or are you getting out now before the real bloodbath begins? Let's have your thoughts in the comments below. Please like and share this video. Thanks for watching. See you in our next video.